Support material 14, we're looking at offshore investments. Okay, so in this particular unit, we're looking at making offshore investments and explaining the reasons why we would want to do that. Okay, we also need to look at investing in foreign countries. So why would you need to do homework before investing in other countries? Different types of investments, and looking at the relationship between offshore and the States. Okay, so how would you be viewed as an investor? Okay, would you be a resident or a non-resident?
Well, obviously, it will be a non-resident.
Well, if you're living in South Africa and South Africa is called home, then you would still be a resident. So then you would be taxed on your worldwide income. So if you did have to invest offshore, would you be taxed on that income that you derive from those offshore investments?
I think in the country you invest, you're being taxed, and then you just deducting of the taxable income when you come to South Africa.
Well, yes, they'll avoid double tax. Yeah. So if you are taxed elsewhere, the actual government will try to prevent you from being taxed here as well. Okay, so there'll definitely be double tax agreements in place. Okay, so what are some motivations for investing in assets outside the country? What do you think?
Better income is also protecting your assets in case the currency, if you have a currency.
Okay, so currency is probably the biggest concern, okay, in terms of exchange rates. Okay, then you said more income or better income. What do you mean by that?
Well, if you're only in foreign currency, so you'll have to exchange into rands. If it gets weaker, you get more.
Okay, good. So,
if you were to just buy it, you'd be paying for it.
Okay, good. So you're talking about maybe certain countries could be seen as being better investments. Right, certain countries could be maybe more productive.
The rate of return. Yeah.
Correct. Okay, and the rate of return that you could possibly get. Good. Right, other reasons? Is there more or less risk? Okay, good. Tax?
Tax breaks.
From where? Tax havens.
Tax havens, yeah.
Okay, so certain countries in the world offer more favorable tax, let's say, rules and laws that allow individuals and businesses to save on their income tax or corporate tax, depending on the situation. Okay, what about risk? More or less risk investing elsewhere?
It's a bit higher risk, because you don't know you might know what you invest in, but you don't know the environment.
Okay, that's one point to look at, but what's another point? If you're investing in other countries, what are you also doing? You're also diversifying. Do you agree? Okay, so there could be risk because you're investing in unknown maybe places, okay, or you're investing far from, let's say, home, inverted commas, okay, but you're also diversifying your risk because instead of keeping all your eggs in one basket, you're investing in other places as well. Okay, that could also be a motivation for lower risk rather than higher risk. Okay, what else? Why else do people invest offshore?
That's retirement, but at least there's income every month.
Okay, good. So it could be preference. Right, maybe you want to retire and you want to move to a different country, okay, or retire in a specific country. Okay, you might choose to maybe move assets, okay, or invest in assets in that country. Okay, so if you wanting to maybe, I don't know, retire on a exotic island in Hawaii or whatever the case might be, okay, you might be looking at investing in that country, okay, or moving offshore or moving assets offshore, okay, to try maybe build some sort of basis, okay, to use at a later stage. Okay. Right, so would you feel comfortable investing in investments in foreign countries?
Mostly not so. We're comfortable investing. On both money, now choose different countries. It depends on your country, right?
It does depend on the country. Okay, so where would you feel comfortable investing?
Well, the USA is definitely like a definite one that is doing that. It's more already in the book. It says like emerging countries, economies, something like.
Because emerging economies are growing.
Growing.
So
there isn't maybe like China and Russia all emerging.
Yes.
Or that
Brazil, Russia, India, China, South Africa.
Those are the ones you invest. So that's, I think, in this stage,
Well, those are growing countries, but they also come with certain risks.
high risks. Yeah.
Okay.
Unlike China, they're busy less around the second economy in the world. So that's also a good investment.
Okay, so do you agree, in terms of investing in foreign currencies, you need to do a lot of research? Okay, a lot of information is required before making a decision to invest offshore. Okay, so most Africans don't invest locally. Alright, so how are they ever going to consider investing offshore? Alright, so you shouldn't be investing offshore before you've invested locally. Okay, because investing offshore is also a lot more expensive to do.
It is, and also the fees and that.
Yes, okay, there are going to be certain costs that you're going to have to cover. Okay, so the South African government applies this exchange control. Okay, why do they do that? What is exchange control?
That's the limit the amount of money you can take out of the country at a given
Correct,
time.
and why do they do that?
Because if they only take the country money out at the same time, it could lead to economic ruin of the country.
Exactly. Okay, so the government needs to control how much people take from this country in terms of investing it offshore. Okay, so it prevents large amounts of capital outflow. Okay, the government doesn't want South Africa's wealth to be invested elsewhere. Okay, government controls the buying and selling of currency. Okay, so if you're looking at buying and selling certain currency, if you look at hard currency, so actually physically buying dollars or pounds or euros, okay, it needs to be obviously regulated and obviously gone through the correct processes, okay, in terms of authority, okay, and approval. Right, they also want to restrict, okay, the free market system because exchange controls a form of red tape. Okay, it's a form of, let's say, a restrictive type of policy that doesn't allow people to reap the benefit of investing wherever they want, okay, as and when they choose. Right, so just something interesting, okay. Loosening of exchange control. The South African government allows investors to invest 4 million overseas, okay, and that could be used to open foreign accounts, denominated foreign currency accounts. They could buy property, they could buy other assets. It doesn't matter what it is, okay, but you would be able to invest 4 million rand a year in offshore assets. Okay, so they're obviously trying to open up other opportunities to citizens. Okay, because remember, as the country grows, the needs of the citizens change. Okay, so obviously, South Africa today is a very sophisticated economy, right? Okay, we've got all sorts of businesses, we've got local and international businesses, so obviously the needs in the country change. Okay, so you may have companies or individuals that have the need for investing offshore. Okay, so you need to accommodate for that need. And that's why, obviously, the government had reviewed the policy and they've now loosened it slightly, right, to allow for more offshore or foreign investments. Okay, because that also helps create opportunity for the country. Right, if more of our citizens invest offshore, right, hopefully they'll be bringing back that income back to South Africa. Okay, because obviously if you're investing abroad, you're getting some sort of benefit. That benefit should be then coming back to the country. Okay, so it's a win-win situation. Okay, so you don't want to have exchange control that's too strict, but you also don't want exchange control that's too lax. Okay, so you want something that's a middle ground, okay, where you've got control, you've got something in place to help protect the citizens, but at the same time also give opportunity to invest abroad. Okay, tax is always a consideration.
Yeah, definitely.
What prevents being taxed twice?
Double tax agreements.
Yes. Okay, so South Africa negotiates certain agreements with countries where you've got lots and lots of inflows and outflows. Okay, trade agreements between different countries. Okay, so if you're trading a lot with, let's say, America, there could be a double tax agreement in place with the Americans to avoid companies being taxed twice. Taxed in America and then taxed in South Africa. Okay, it's just to help make the, let's say, the running of the business as fair as possible. Okay, remember, businesses don't want to pay tax. Okay, they want to pay tax, but they want to pay the smallest amount of tax. They don't want to pay the most. Okay, they want to try to reduce their tax as much as possible, and the DTAs can help them do that.
Okay, what other, I know I asked the previous slide said which country would you invest in? What other country besides maybe China or the USA would you invest in?
Well, there's lots. If you look at what we spoke about earlier, the tax havens, we are some of the tax havens.
Something like Seychelles or that's basically something like that.
Jersey, yeah, Jersey, Isle of Man, okay,
Isle of Man, that sounds good.
right. Those are the more popular, let's say, tax havens that you get in the world. Okay, we'll look at some interesting stuff just now, and we'll consider other countries, okay, and what should we consider investing. So you said you would invest in the US.
USA,
Okay.
yes.
We'll look at something just now, and then you can maybe decide, will you still invest in the US compared to South Africa? Okay.
Yeah.
Right, so offshore investments. There's the note about diversification. What does that word mean? Okay, it means spreading your risk. Don't keep all your eggs in one basket. Okay, so have property, have short-term money market, have stock, right? Have equity, but then also consider this offshore. Okay, because if something does happen in terms of the downgrade, okay, because at the moment they're talking about downgrading certain government institutions. Okay, that's yes, they're under review by I think it's Moody's. Some of the rating agencies have put some of the government, let's say, parastatals under review. Okay, are they still going to keep their rating at that level, or are they going to review it and reduce the level? Okay, so broader choice of products and services. Obviously, you want to consider things elsewhere. Okay, remember a marketplace is what? A meeting place for buyers and sellers. Okay, so if we're looking at offshore investments, you've got other markets to consider. You've got more choices of products and services. Okay, it's like, where do you buy your products?
Groceries, man. There's a local Checkers Pick and Pay.
Okay, but where? Carnival. Carnival Mall.
In Southport.
In Southcourt.
Southport, around the state.
Salcourt.
Yeah, there's Springsgate as well. We buy groceries in Southport.
Oh, okay, Salcourt is a mall.
No, it's Southport. It's a town. There's a Southport Towers there.
But
It's a mall. Southport Towers is a mall.
okay, but it's a mall.
Yeah.
Okay, so that's your place in terms of the marketplace. So you go to that place to buy your groceries and stuff, right?
Or Springsgate Mall.
Or Springsgate Mall.
Yeah.
Okay, so have you ever bought goods from other malls?
Yes, we have.
Santon,
No, not
Rosebank,
No.
Northgate,
We have bought
Eastgate,
small ones.
Eastgate,
No, Eastgate. We don't go that distance. No.
Bedford,
No.
Carnival.
We did buy yes, Pick and Pay this year.
Okay.
When we went on holiday, we just stopped in by the restaurant.
Okay, so why aren't you considering the other malls?
Well, the one we mentioned earlier, too far. So.
But besides being too far, aren't you limiting your choices in terms of products and services?
Yeah, and
Okay, because those other malls and other places could offer different products and services. There could be other companies, other businesses, maybe a broader range of products and services depending on the situation. Okay, so offshore is doing what? It's looking outside your current location. Okay, so we're obviously looking at the current country. Okay, so what can't we buy in this country? Good example is what? So Starbucks. Have you ever?
No, I haven't bought Starbucks.
Haven't. Okay, so Starbucks before, I think it was this year even, or last year, I'm not too sure when the first store opened, but in Joburg we now have Starbucks. Okay, so if you go to Rosebank, there's a Starbucks there. In Mall of Africa, there's a Starbucks as well. Yeah, Starbucks is a very, very popular coffee company. Okay, massive in America, like huge. Okay, and before, South Africans never had access to that. We only had what? Mike and Bean, what's it, Vida, I forget the whole name, coffee. Okay, Seattle. Also, okay, but
Johannesburg, Victoria, there's a lot more than on the
okay.
East. Even the Woolworths of East, the Springs Woolworths is like maybe the bottom of the range, like D grade.
Why?
It's not fancy food there. It's like basics, everything basic. It's a small Woolworths and there's no fancy food.
So
the Eastern markets, you got all these clothes, bedding and stuff. There, it's like in small scale.
Sure. I've never been to Springs, so as I said, I can't really comment. I don't know what the how can I say, the atmosphere is like. So it's a very small town.
It's not that small, but the Woolworths there is tiny. It's
Okay.
Not, but the town is
So see there, that's a perfect example. So the Woolworths in your suburb or your neighborhood, your town, is very small and limited in terms of choices of products and services. Possibly. Okay. All right. So if we look at offshore, we're opening up our opportunity to invest in other products and services. Okay. As I said, the example was Starbucks. Obviously, we now have Starbucks in South Africa, so now people can buy those products and services. Okay. Before we couldn't. Okay. So broader choice of products and services is important from an investment point of view. You want more opportunity to choose. Okay, so for example, when you go to the Woolworths, you're probably thinking, oh, what a disappointment.
It's a Springs one.
Okay, but then when you go to East End Mall, you're thinking, wow, this is like it's different. Okay, because of the broader choice of products and services. Okay, so risk and return is always a consideration. Okay, we spoke about it. If you do invest offshore, is there more risk? Yes, but there's less risk because you're diversifying as well. Okay, so more risk because there might be different political scenarios. Okay, so investing in, let's say Brazil. Okay, Brazil's going through some tough times in terms of politics. Okay, they recently impeached their president. Okay, that Dilma Rousseff, I think it is. Her name is, well, Dilma something. I think it is Rousseff. Okay, but yeah, she basically, they had a vote, special vote, and they asked her to leave office. Okay, so there's a lot of political uncertainty there in Brazil, right, and other countries as well also have their challenges. Okay, so there could be more risk, there could be less risk, but we always need to consider the risk versus the return. Okay, if you are going to invest in Brazil, you're going to want a bigger return. Okay, because it's an emerging market, there's more uncertainty. Obviously, the return needs to meet the risk. Okay. Right, exposure to different geographical locations. Right, so if you were an investor, would you invest capital in Springs?
Investor, I don't know.
Would you? Think about it. You're living in the area, so would you?
It's not great big malls like Eastern Mall, Lakeshore Mall.
So would you consider investing in Springs? Would you build another Lakeside Mall or East End Mall in the Springs area?
Well, they just built a new mall, so I think, I don't know, man. It's in between. That's the thing. I might.
Okay, so the thing is, if you're the property company, you need to have exposure to different geographical locations. Okay, so the mall that's being built or has been built in Springs is probably owned by a big property company, because they've chosen to have exposure in different geographical locations, because they know there's opportunity in all areas. Same thing that we need to consider here in terms of investing in different countries. Okay, so South Africa is not the only country in the world. There's so many other countries that we could possibly invest in. Right. Then you've got to note here about developed versus emerging, okay, which is what you spoke about. Right, so what did you take away from that reading of the textbook in terms of your info? You spoke about emerging. So give me 1 or 2 points for each. Developed versus emerging.
Well, emerging there's more room for growth. So there's a possibility, but there's also the risk of, as you said, political and stuff. So there'll be like, we could lose everything in one shot. But they do assume move again this year.
Okay, and then developed?
Developed, well, you say at the end of the day, and there's not much, it's developed, there's still room for growth, but not as much.
Yeah, developed is more established. Okay, it's like a mature type of investment to consider, yes. Okay, good. Right, so I want you to think about some of the reasons why people invest. Okay, here are some of the reasons that they spoke about in your textbook. Okay, they spoke about protection against currency fluctuations. They spoke about different opportunities. They spoke about access to offshore fund managers. Right, more expertise. They spoke about balancing a portfolio. Okay, diversifying internationally. They talked about maximizing returns and tax considerations. Are there any other reasons that you would consider investing offshore? Preference?
What my preference for?
So do you like certain countries? Which country is your favorite?
Well, I've seen a lot of USA and TV, so I like the USA. It's open.
Okay, so your favorite country is which?
I haven't been.
If you had to choose a country.
Let us think about it. So I've been to 3 different countries before. I think maybe England, rather England, because there it's all developing as well.
Okay, so why do you like England? This is your preference, you see? Why do you invest offshore? So if you like England, you're probably likely to invest in that country rather than investing in which country don't you like?
Yeah, the country I like is. Well, I haven't been to Zimbabwe, but I've heard about things going there. So.
Okay, so
country I don't like in Europe, I don't know.
Okay, so let's go with that, Zimbabwe, you said.
Yeah, Zimbabwe.
Okay, so you like the UK, you don't like Zimbabwe. Okay, so is that a preference?
That is a preference.
So where would you be more likely to invest if you were looking? Yes, you would. Okay, that's preference. Yeah, so you would like to invest in the UK rather than investing Zimbabwe, purely because of your preference. Right, what else? Good. Okay, so resources. Right, so which country am I going to invest in? Well, you might consider investing in maybe like an oil-rich country. So would you invest in the Middle East?
Yes, why?
Well, if you're looking at investing in oil companies,
not Syria, but I don't know about that.
Saudi Arabia does oil. That's a big producer. But most of the Middle East, most countries in the Middle East, Dubai, that's also another example. We could maybe talk about that. Okay, so would you invest in Dubai?
I would do, but I heard on TV there's no oil place there. I don't know why.
Dubai, I'm sure there is.
Not Dubai, I mean, I'm thinking of that other place where all the big buildings have gone up.
Which other place where all the big buildings have gone up?
You know, there was like when a crash came, everybody abandoned their cars at the airport. I don't know if that's Dubai or not.
Sure, I can't remember that news article.
You know where the flower would land?
That's Dubai.
That is Dubai.
Yeah, that is Dubai. What do they call that? I know what you're talking about. Where they made like
An island.
Yes, they've literally created land in the ocean. Yeah. That's how wealthy that country is, because that country can literally take sand and throw it into the ocean and throw enough of that sand in the ocean that actually builds a land, okay, landmass. Okay, it's creating space. So whether it's good or bad, you can't really say, but it's something that has generated an opportunity, yeah. But because now you've created more land from nothing, from the ocean.
Once you washed away eventually, isn't it a risk that you might lose the oil?
Well, if you put so much of that sand in the ocean, it's not going to go anywhere.
Sure.
Okay.
Because I saw the show when they were dredging the bottom of the ocean to put the stuff, dredging like close to the beach with all the stuff on it. So they're saying it just come from under the water. Yeah,
well, it's probably from maybe under the sea, or it could be elsewhere, it could be from anywhere really, but they're obviously creating opportunity, okay, assets. Right.
And I did hear that there's no oil there. I don't know why I heard that.
Okay, we can check that just now.
Sorry, man. I'm not mentioning stuff that's relevant.
No, it is relevant because it's international. Yeah, so that's fine.
Saudi Arabia's the oil place, right?
Yeah, a lot of different countries. In South America, they also do a lot of oil. So like places like Cuba and Venezuela, they all rely on oil. Okay, because that's their main form of economy in terms of. And that's why those countries suffer when the oil price decreases.
I see what's the country you mentioned earlier with the United Arabs? And I said Syria, not Syria.
Dubai.
Dubai, the other one you mentioned.
Middle East, Saudi Arabia.
That's it.
Okay, yeah. So there's a lot. There's Iran. There's Iraq. What else? Middle Eastern countries. Sure.
Afghanistan.
Yes. There we go. Okay, those are more Middle Eastern countries. Yeah, but also very, very wealthy in terms of resources, natural resources, oils especially. Okay.
When I don't talk about Zimbabwe being the least favored. They also invest a lot of resources, but they are managed very poorly by the government.
Yeah, but see, that's different. That's political risk. Okay.
Everyone's in themselves.
So see, there you go. There's another reason why you might or might not invest.
Yeah.
Okay, another reason could be politics.
Yeah.
Okay, what sort of government is in power? Okay, so would you invest in a dictatorship?
No.
Would you invest in a democracy?
Yes.
Okay, that could be. See, that could be something that you would consider. Okay. Right, so risk and return. What's the relationship? Can you see this in finance?
I think it's straight.
Why is it straight? Oh, I didn't draw it.
Straight line up.
Why is it straight?
It's in proportion, isn't it?
Okay, meaning if the risk increases, does the return increase?
Yes, the return increase.
It should increase in line with the level of risk. Okay, good. Right, so money has lost its nationality. Why?
It depreciates.
No, nationality. What is nationality? Okay, so are you a South African?
Yes.
Born in South Africa?
Yeah.
Do you have like a British passport or?
South African passport.
Okay, so your family in terms of nationality all 100% South African.
My father's from England.
Okay, so then you should have a British passport.
I can get it, but
yeah, because if your father's from England, then you would be able to get that dual like citizenship in terms of getting British passports. Okay, why don't you want to get that?
We did talk about it earlier, but then there's a whole other process we got to go through.
So why don't you go to the process?
We have to be an SA citizen again as well.
Oh.
That's what I understood. I'm still a bit cloudy on that.
Because if you had that British passport, you could travel like easily. You don't have to have a visa or anything. You could literally just hop around from country to country. Okay, so why didn't you? Yeah, all the people I know that have any sort of let's say mother or father from England and that have the possibility of getting a British passport, make sure they get the British passport because it's a powerful advantage to have. Because traveling becomes so much easier. Okay.
Then I must get it because when we're at our household, everything drags.
Okay.
That's what we have going. I think it's like I did you.
Okay.
There's a swimming pool that's been sitting not used since 2011.
Sure. Is it green?
Well, we have pumped it out in 2013.
Oh, okay.
It's been raining and it's been filling up again.
Sure.
I'm
sure mosquitoes must be bad.
No, not really, no.
Oh, because stagnant water isn't good.
No, it isn't, but
okay.
I must get a British passport, man.
Yes, definitely. As I said, all the people I know who have, let's say, family ties to England, okay, all have British passports. Why? It's an advantage.
It is an advantage.
Okay, because you get to travel. You can literally jump on a plane, take your passport, and you don't have to apply for a visa.
Nothing like that. No nonsense like that.
Yeah, it's much easier to travel. Okay. Right, so opportunities to invest elsewhere to generate yield. Okay, that's why money has lost nationality. Money has lost nationality because the world has become a smaller place. You can invest wherever you want to. Okay, so most important is research. Make sure you consider the geographical consideration. Okay, so would you invest in property in an area that's prone to natural disasters?
No.
You wouldn't want to, okay, because that's geographical consideration.
Very high risk.
Of course. Okay, tax. Would you invest in a country with high tax or low tax?
Lower tax.
Lower tax, obviously. Would you want to invest in a country with very, very strong or strict regulation in terms of legislation or more lax?
Perhaps with more strict because at least there's rules to follow by. It's lax.
Okay, good. So two ways of looking at this. You would want regulation in terms of safety around your investments to be strong,
Yeah.
but you would want the ability to invest in those countries to be quite easy to do. Okay. Liquidity. More or less liquidity. More liquidity. Okay. You don't want to wait forever for that country to now pay you back what you've invested. Risk, obviously we want high or lower risk.
Lower risk. Higher risk or higher return, lower risk.
It depends. Okay, risk profile.
Risk profile.
Right, then we need to look at the economic and political consideration. Okay, so what's the environment like? Would we invest in that particular country, yes or no? Okay, and then obviously research. We need to research money laundering. Okay, you need to be careful when considering investing offshore. Okay, because if you don't do it properly, you could be guilty of money laundering. Right, and that's a serious offense.
Can they charge you for money laundering when you didn't do it deliberately?
Of course, because you should know what you should do, okay, before doing it, if that makes sense.
I understand what you mean.
All right, so you can't say, well, I don't know, okay, we know, okay, drinking and driving is illegal. Okay, you'll get jailed for that. Okay, so now, can you say, I was at a party and I had a few too many, all right, and I didn't know that the police were going to stop me?
No, you can't say
You can't say that. Okay, you knew that was incorrect. So you knew that getting into the vehicle, that if you were going to get stopped, you were going to get jailed. Okay, so you can't say, well, I'm going to be taking money offshore, but I'm not going to check if I'm going to be doing it correctly. That doesn't quite make sense. Okay, because then when they do check that, okay, you've taken money offshore, where's your tax clearance certificates? Okay, where's your documentation? Okay, and if you can't produce that, then that's a problem. Okay, so always when you do anything, make sure you know what the rules are when doing it. Okay.
I asked that because they're interesting.
Okay, why have you done something that you shouldn't have done?
No, I haven't done it. I'm just asking this. I'm a bit confused with money laundering.
Okay, money laundering is when let's say how can I put it? Money laundering. It's a way of making proceeds from crime legal. Okay, so obviously criminals look at investing offshore. Why? Because they look at money laundering. Okay, because maybe they're selling arms in some war-stricken country. Okay, and they're selling arms between armies that are fighting in a country. Okay, and then that money that they've derived from weapons of war, right? They're now going to try launder the money in other countries, okay, to make it look legal, okay, which it isn't, okay, because the money was derived from what? Arms deals, okay, that's a problem. Okay, so money laundering is doing that. Okay, it's trying to pass money that was generated unethically or illegally, and trying to pass it through the system. Okay, and that's illegal. Okay, so banks have good processes in place to identify money laundering. Okay, so any suspicious transactions that go through the bank, okay, they need to report it. Okay, they need to report it to the they call it POCA, the Prevention of Organized Crime. Okay, there's a unit that actually does the investigation. Okay, right. The Hawks will also do that as well. All right. So
I watched a show last year where they talked about in America where this guy was printing out money for himself.
Sure.
Printing, he made millions, and then
really, I didn't hear that. But that's interesting.
Yeah, he bought a car on that, but they got busted because they did one transaction with all the same money.
Sure.
So that's why they figured out all the amounts are the same. And
sure.
When he bought his car, he bought with mixed ones, like legal money, but I don't know how he got legal money. Maybe
okay, that sounds very very suspect. Okay.
Yeah. At those times, the money was mostly easy because they could just put that gold strip paint on it.
Serious? Wow. Okay, I didn't know it was that easy to counterfeit money. But banks normally put a lot of security on their notes. I mean, just look at our notes. There's so many security features. Okay, it's to prevent things like that, counterfeiting money. Okay.
I mean, that was before all this preventable measures. That was like when it was easy.
Okay, yeah, maybe that might have been a long time ago when you watched the documentary, possibly. Okay, so with offshore investments, what currency should I invest in? So, have you thought about currencies?
Not really, no.
Okay, is there a currency that you like?
I like the dollar.
Okay, you like the dollar. Right, so would you invest in dollars?
Yes, I would.
Okay, so if you want to invest in dollars, which countries would you invest in?
Actually, America or...
America?
Or like Eastern countries. I'm talking about Arab Emirates.
Okay.
Also deal in dollars with the fuel.
Yes. Okay, good. Right, what costs should be considered? Is there a cost?
Yes, there would.
There's always a cost. And what's the cost? It's converting currency.
It's also the commission you pay.
Exactly. Okay, so when investing offshore, you not only need to consider the risks of investing offshore, you also need to consider the costs. it's a lot more costly to invest offshore than it is to invest locally. Right. Firstly, you need to consider the exchange rate. Secondly, you need to consider the fees and charges for doing it. Okay, for doing the transaction. Right. 3 questions here for you to consider. Is it possible to invest offshore through local investment funds? So you want to invest offshore, but it costs too much, and it's a hassle to convert rands to dollars, dollars to rands, and all of that. So can you do that locally? Can you invest offshore locally?
But going to a broker, yes, you can do that.
Yes, you can, in terms of a fund. Okay, so you get funds that actually invest offshore. You get offshore investment funds. Right, so you take your rands, you give it to the investment firm, and they invest those rands collectively in offshore investments. Right, so that could be a possible consideration in terms of offshore investments. Okay, you might not want to do it yourself directly. You might want to maybe consider an asset manager to do it for you. Okay, so what foreign assets can we consider? Give me some examples. There's a lot.
Foreign assets, that's like car manufacturing companies, like America or one of the other countries that make cars.
What else?
I can't think of any other countries at the moment.
What other assets?
Germany. How property, they property overseas where you can charter engineering, where you can come back to South Africa.
What else?
Like we toll, like their toll schemes, they are in other countries.
Okay, what else? Foreign assets.
Foreign assets.
What about the more common ones? You've given very exotic answers. Okay. What about simple ones? Equity. Can I invest in other countries' shares?
Yes, you can. Other countries.
Bonds.
Bonds.
Cash. Even the currency. That can be an investment.
When I was thinking of only assets earlier, like
property, physical assets, sure. Yeah, that's fine. Art.
Art, you can.
Yes. Okay, so there's a lot that you could possibly invest in. Okay, and another note is the estate planning. Okay, offshore assets protected by an offshore wall. Right, if you are going to be investing offshore, you also need to consider a will which will include those offshore assets. Okay, so normally very, very wealthy individuals which have a lot of assets in all sorts of different countries. Okay, remember, you've got assets sitting in different countries, so now it needs to be part of the will. Because now, what happens if you pass away? Who knows what assets you've got in all these different places?
Be more specific about it.
Okay, they need to have a specific will that identifies where those assets are and which assets you want to give to which of your beneficiaries. Okay, so there's a few of the foreign assets. Shares, tank containers, yachts, property, businesses, trusts. There's such a lot.
Even containers are tank containers.
Yes, yeah, that's also in the textbook, yeah. Yeah, they talk. What is a tank container?
That's the thing they use to transport goods and stuff.
Pretty much, yeah. Okay, so oil, those big, cargo ships basically. Okay, there's big containers. Cars, definitely, yeah.
Yes, I remember when I was watching this with you right there. Years ago, I was watching TV before school. The car I drive, they were exporting them to England and there's a lot of those cars in England, so they must have really done well with exporting. No, I have to go forward. I think you've seen that car. You've seen the car driving. That's when they export a lot.
Yeah, Golfs are popular.
Yeah, very popular.
VW is very popular.
You can ask, why don't you buy when they're cheap? I'm just asking, man, because
I mean, cars are cars, eh? It's yeah. I'm not so. I just don't feel like VW is too high risk. Your insurance is a lot higher. In terms of theft, it's a lot higher. So there's a few reasons why VW is not such a good option in terms of, let's say managing it. Okay, because as I said, insurance is higher, the risk of theft is higher.
I know. Okay. My mom's blue car was stolen in 2004.
Okay, so
she was a golf. She was a golf too.
Okay, yeah, I see.
For 25 years.
Sure.
And then some criminal decided that's my car now.
Yeah, no, that's bad. See.
And I've seen also these big cars like Hilux and Ranger also.
Yeah, Toyota is also very high risk. Toyota and VW are high risk cars. Okay, lots of theft. Okay.
But the main good thing about Volkswagen, if someone smacks you in the back, the parts are cheap to replace.
Definitely, yeah. So see, there's pros and cons, yeah.
Yeah.
Okay. All right, Robert, that's the first bit.